So, according to VeriRisk, there are more than 2 million homes in California that are in an area of high or extreme risk to wildfire, by far more than any other state. Obviously, it's beautiful. Texas was a distant second with 715,000. And we're still building. It seems like all of the new construction that we're seeing are mostly up in the hills because it's desirable. You've got a beautiful view. But what can these associations or these buildings, what can they do to protect themselves?
The Uniform Building Code now requires certain types of fire-resistive structures anyway. I mean, we got rid of wood-shake roofs in California over the last 10 to 15 years, fortunately. But there's been really a lot more emphasis on fire-resistive construction. Stucco and rock exteriors that are less prone to fire damage. And there's something now called an automatic soffit closing system, which will allow the soffits, which are effectively venting systems for the attics of dwellings, to be closed automatically to prohibit those embers from getting up into the attics and causing home fires on homes that are unattended and unprotected, which is really a good result. So I think we're seeing more technology around those type of issues. I think we want to see more of fire-resistant plant material planted nearer the dwelling, and probably the setbacks will be greater than 300 feet anymore, in order to prevent these huge kind of fires that are just raging across the country.
And even then, if you've cleared the brush to 300 feet, as you suggested earlier, the embers can float up to a mile in the air. So if you don't have those sealed soffits, the vents, it can float right up in there.
Some of the other things they can do, too, is consider if they don't have tile roofs now and they're thinking about replacing the roofs, to really consider replacing them with tile roofs. You can also enclose the eaves, because that's a lot of times where the fire starts, like going in through those openings, but it also comes up under the eaves and then starts in the bottom of the wood roofs there. And so they go up and you can enclose those. Also, I think about with the cost that's going on, that's driving up, that looking into putting sprinklers on the roofs. I think in a lot of cases with the new construction, some of them are sprinkling the roofs.
Outside the roof?
Uh-huh. And seeing how much that would cost and the installation, because if you think about amortizing that over the years and the savings that you could potentially get on your insurance because you have that, plus your home's not going to go up in flames, more than likely.
So you think that underwriters would be more willing to entertain a risk? They'll listen to that kind of an argument?
In fact, I got involved in an account a few weeks back where somebody was working it, but they didn't have a lot of the facts that I discovered. They didn't ask about the roofs. They didn't ask about the clearance. They didn't ask about the eaves. When we went on Google Maps and looked at it, we saw that they had the enclosed eaves, that they had tile roofs. We found out the clearance. We could tell that the fire departments were only 3 or 4 miles away. All of that. And then I went back to some of the carriers that had declined the account, and they were willing to look at it because they had this additional information. So the additional information made them, instead of staying away from the table, made them come to the table.
Are there any kind of creative solutions that you've seen in order to get a carrier to write this risk beyond just the protections that have been put in place? Like you as a broker, how do you get creative?
With some of that stuff, it's dealing with the deductibles. And I think we've talked about that, where instead of having what we call a flat dollar deductible, $5,000 or something to that effect, is they put a percentage deductible on it, as if they would in an earthquake. It's a catastrophic exposure. So what we're starting to see now is carriers putting a 5% deductible on, and that would be 5% of the replacement cost of the buildings that were involved in the loss, so that everybody has some play in the game. So we're seeing that. We're seeing where maybe we have to split this up in other ways on the accounts. Maybe they don't even buy full limits on it if it gets too costly. I think the thing is to give the insured as many options as they can, and then they have to decide where their pain point is.
And then this really puts a lot more emphasis on making sure every owner in that project has purchased loss assessment coverage. What's unusual, and particularly in a single-family home facility, like a planned development, oftentimes the agent or broker writing the account doesn't even realize that the home is in a planned development and subject potentially to a special assessment. A special assessment on some of these cases, but we've got a 5% deductible, could be quite large. So individual owners should be maintaining a loss assessment limit of $50,000 or higher on their standard policy, not to mention the earthquake
And if you live in a condo, then obviously that's all the more important.
Right. Yeah, definitely.
Those deductibles could get pretty darn high.
It's just the circumstance. You live in a 100-unit association. You have 1/100th of everything that goes right. But in this event, you've got 1/100th of everything that goes wrong, and it's going to come to you as a special assessment. And unless you're prepared for that financially, and by buying loss assessment coverage, which is the only way to address this fire exposure, it needs to be purchased, and owners need to have it in their back pocket before the event occurs.